profitability, market entry, and pre-internship preparation. And since we'll be starting with profitability first, as we discussed earlier, the structure for profitability is very straightforward, right? It consists of looking into it consists of breaking down cost and revenue into its component parts, which should be the unit cost or the unit revenue, and then looking at the number of units sold, right? Now, the second aspect to it, of course, is in terms of breaking the revenue down, or rather the revenue in terms of the number of units, we'll need to look at the market size and the market share. And when it comes to actually breaking the revenue down, we'll need to really segment it, right? But before we go into the nuances of segmentation, we'll also look at what the costs that need to be covered are. Again, we'll explore this in further detail. Now, when it comes to the cost, we'll need to consider the fixed and the variable costs, as we've heard in plenty so far. The next question, of course, is when it comes to segmenting the revenue, how exactly do we segment it? So, request you guys to participate as much as possible in this session because I just want to make this as interactive as possible. So, when it comes to segmenting the revenue, what are the different lines of segmentation that one would want to consider?
Are you talking about something like geography or different products or business segments that exist within the company?
Right, precisely, right. So one is, of course, geography. The other is, it could be in terms of the type of the customer. It could be in terms of the region, which you said, and it could be in terms of distribution channel. It could be in terms of the product line, and then finally, it could also be in terms of the industry vertical. Now, the whole point, right? The question of why we need to segment is really in the approach. What happens in profitability cases is that we'll need to really get down and find what the real problem is, right? What the issue is. Now, in order to do that, it is all a question of segmentation. At a broad level, when we find it actually is a generalization, right? Hey, profits are down by 20% over the past 5 quarters. What is the reason, and so on, right? So at such a broad level, it is very insufficient as far as information is concerned in order to arrive at a particular conclusion, or in order to really drive down and find out what the root cause of the problem is. So therefore, in order to isolate what the problem is, segmentation is critical. Now, when it comes to now, once segmentation is done, what we need to do in terms of step two, right, is we'll need to really compare this with historic figures and competition. So, how this really works is there are two kinds of comparisons that one can make. One is a timeline analysis, and the second would be in terms of the comparators, right, or versus or the industry benchmarks as such. So, once this is arrived at, so why this is critical, right? So let's look at timeline analysis. Why is this critical? It's critical to understand whether this is a problem that has spanned multiple years, or whether one that has been really more recent. And of course, in most problem statements, we will find ones that are more recent, right? And another effect of finding out what this is it's also easier to know whether it's a macro problem, or say a micro problem, right? A company specific problem. And then when it comes to comparing with competition, again, so it is critical to find out how our firm or the client's firm differentiates from the competition in terms of its performance and various other metrics, right? That is, of course, self-explanatory. Now, the second aspect is, of course, to isolate the key driver which causes the problem. And finally, the third would be to arrive at the recommendation, right? So what we've seen so far is we've seen the overall approach, and that's not where the premium is, right? Because as we've discussed earlier, the overall approach is fairly straightforward. That has been discussed in plenty. So the critical aspect here is in terms of segmenting the problem, the various modes or the lines of segmentation that we'd be able to move forward with. Excuse me, sorry. So we'd be able to move forward with. And finally, what I'd want to discuss, right, is in terms of the cost component, right? So when it comes to the costings, we'll need to look at multiple aspects. And this is a critical aspect for the cost side for the simple reason that there are multiple levers that one can utilize in order to reduce cost, right? So what are these different levers when it comes to the entire value chain? And this is best solved using the value chain approach. So this works, by the way, for both variable and fixed costs. So we'll need to isolate some of these points to segregate them in terms of the fixed and the variable costs, and then proceed forward. So when you look at R&D, the first thing that comes to mind is, hey, what is the sort of R&D they're making, whether the equipment costs are high, what is the kind of human expertise that is required, and finally, what is the kind of financing, right? And then the second aspect is, of course, in terms of raw materials, we've seen this in plenty. Of course, the cost of the raw materials themselves, the possibility of bulk deals, which would help lower costs, rationalizing suppliers, right? And by trying to, give larger deals to existing or very specific few suppliers, what is the sort of leverage that we'd be able to benefit with, and also in terms of the quantity, right? The next aspect is in terms of the processing. So we'd be looking at, say, the machinery, the rent, the laborers, and I mean, the three of these are fairly self-explanatory. In terms of technology, given the kind of automation that exists, there are multiple possibilities. However, when it comes to technology and its implementation, there are also a lot of costs involved. So though there can be a cost in terms of, say, setting up the technology, we'll have to really judge whether the benefits, right, down the line are actually worthwhile. The next aspect, and this is critical, is capacity utilization. So what we see here is that when it comes to capacity, the second the capacity utilization is low, the cost per unit suddenly increases, right? And therefore, really need to look at pruning capacity if in case that's in excess supply and so on. And this is especially important when it comes to cyclical industries, right? So we need to really determine how optimal capacity we need to maintain, and finally, how to prune it when things go down, right? And then finally, we'll also need to look at the packaging and whether that can be rationalized and so on. Usually, all of this is done versus, say, the competitors that we have, and that's how you rationalize the packaging as well. Now, when it comes to storage and transportation, this is fairly clear. It's inbound and outbound costs in addition to the storage, right? So inbound being the transportation to the warehouse or from or a depot, and finally storing them and all of the administration costs thereof in terms of the storage in the warehouse or the depot, and finally the outbound logistics from transportation to the of transportation to the end customer, right? Now, when it comes to the distribution costs, this is again fairly straightforward, which is essentially what sales channel we are trying to use, what is the sort of human costs involved in the sales force, what is the sort of training that is required, and so on. Marketing again, when it comes to marketing, we'll have to look at the marketing channels because you see that in most cases, the online channels are far cheaper than that of the offline channels of marketing, right? Than the traditional forms of marketing. And we'll also need to look at the overarching strategy and therefore how that can still be. So if the customers are mainly offline, right? So for instance, if you're trying to cater to a rural area, going for an online channel would not be worthwhile. So for all of these reasons, this has to be taken in context of the target market, the preferred modes of reaching out to the customers and so on, right? Or the preferred distribution channels and so on. Now, and finally, we come to the last portion, which is the after sales service, right? And this comprises of the repairs, the spare parts, and the returns, right? Fairly self-explanatory there. So once all of these factors are taken into consideration, we'd be able to find one or the other lever which would help optimize that cost and help, overall improve profitability, right? Now, a critical element that I want to highlight, right, is that the only way in which a profit, a bare profit or profit improvement case differs from that of a profitability improvement case is in the sense that it's all about the margin, right? So profitability talks about the margin, and the margins can be of three types. One could be the gross margin, the second could be the EBITDA margin, and the third could be in terms of the net margin, right? Now, the second, when you talk about EBITDA margin, it's essentially the operating profit margin, right? So when it comes to the three of these, we really need to look at what is the sort of profitability improvement one is looking at. So, for instance, if you just wanted a gross margin improvement but not say a net margin improvement, you would not really be considering pruning the financing costs, right? Because that is not part of the gross margins. What we'll need to only consider would be the cost of goods sold and so on, right? The raw material costs, the processing costs, and so on, right? The R&D and so on. So what we'll really need to do when it comes to all of this is that we need to find out where in the value chain we can really prune these costs. But most importantly, the real question is what is the sort of margin improvement we are seeing in terms of profitability, and then going ahead and solving that problem, right? So that so thus we talk in terms of profitability. Another critical aspect that we need to keep in mind when we solve for profitability cases is really understanding the problem statement, right? So, what is the best way to really understand the problem statement? Of course, other than the preliminary questions that Yogesh, I believe, has covered, it's also about really understanding the business, right? And what does this comprise of? It comprises of the product, right? That they're really trying to sell. It comprises of the company itself in the first place. It comprises of the customers, and finally, it comprises of the competition or the industry, right? So this is essentially the business situation framework, which we will explore in greater depth in a little bit, right? So what I'm really trying to say is that profitability and profit related cases are best solved by understanding the problem statement very well. And despite all of the segmentation that we saw and the various cost components that we saw, what we really need to focus on is understanding the four aspects to any business, right? So essentially the business situation at hand. So we can leverage the business situation framework and therefore be able to arrive at the solution probably much sooner than what would be expected. And this is critical because there is no singular framework that you can really look at when it comes to solving cases, because they're always a mix of various factors. And the most optimal way of solving is always a combination of different frameworks. Of course, one starts with the profitability framework that we saw, right? Breaking it down into revenues and costs and so on. But down the line, we'll need to understand what the real nuances in terms of segmentation and so on. And therefore, with this, for this, we'll need to use the business situation framework. The next aspect that I'd want to cover is the case, right, on profitability. But before I go to that, are there any questions with the progress we've made so far?
I think it's fine, Rajath.
Okay. So now moving on, we have a case that I have in profitability. Right? So what we find is our client. So again, I'm not going to work out specific details as such in terms of the mathematical part of it, because that would take longer than expected. However, we'll need to look at the approach, and this is what is critical here. So what we have is our client is a large Indian pharmaceutical manufacturer, declining profits for 5 quarters. So we need to find out the reason and make suitable recommendations. So folks, please share your thoughts. What will be a first set of questions that we'll need to know or answer in order to find out what the underlying issue is?
So Rajat, I would start with whether this particular decline of profit is specific to the Indian company, or is it we are witnessing in the industry as well?
Right. So this is specific to our client, so it's a micro problem.
Okay, so then I would go ahead with find out the like basically if you have any numbers related to like what what are the numbers associated with the decline in profits. So how much profits have been declined for the last 5 quarters?
Right. So let me do you a favor, right? So let me give you those numbers as you asked them, right? So we witnessed around a 7% decline in profitability over the last 5 quarters. So what would be the next thought?
Rajat, I have a question here.
Sure.
So, when I say there's a decline in profits, so it's like, is it safe to assume they are talking about absolute numbers and not profitability of the company?
You need to clarify, right? So you need to clarify. So when I say declining profits, it's usually an indication of just absolute profits. However, if you say declining profitability, that goes on too, right? So it could be either always better to clarify. And if you ask me right now, I would say the absolute numbers in terms of the profits that has actually decreased.
Okay.
But
Then
let me
I
do you
think
one better. Yeah. So let me do you one better, right? So what I'm saying is the profitability has been more or less flat, and what we see is just an absolute decline in profits that we need to focus on. Yeah, should you're saying?
okay. I think that's a good information. Profitability has remained same, but profit has decreased.
Right.
So I think next that gives a clue about how the revenue and cost patterns would be working out there. So next step would be questioning those two regions. So since the profitability has remained same, so probably the decrease in revenue is has matched the decrease in cost, or maybe the that way.
No, it just means that there has been a decline in the profits, and so let's start to isolate the problem, right, into revenues and costs. So what we've seen is that it's more of a revenue problem, and here we are trying to say that look, in with the decline in the revenues, there's also been a sort of a similar decline in the overall profits. Right? So that's what we're trying to imply. So let's also also consider that costs haven't been an issue, or they have remained more or less the same. Yeah? So now how do you explore further?
So
I
Rajat,
think
now I
we
think, yeah.
Prayer, go ahead.
So basically, now I think we should go into what constitute revenue, which is essentially average selling price and the volume. So revenue is a
Right,
function of that. So do we have any
right.
further data on how has there any decline in the our average selling price, or has our volumes have decreased?
Honestly, neither. So neither has the average selling price changed, nor have the quantities changed.
Okay, okay, understood. So before going further, do we have only one product that we are looking at, or we have a product mix?
Right. So we are into manufacturing of three critical components in the pharmaceutical value chain. This should have come out as a preliminary question. So the three are first the APIs, right, which is essentially the raw material in order to make the overall pharma product. The second is in terms of the you know the formulation in the first place, which is called it's called a PFI, which is called a pre-formulation intermediate, something like that. I forget the exact term. So, and then the third is, the overall formulation, which is the end product. So these are the three kinds of products the product lines that we have, and this is what we sell.
Okay, understood. So I think what you had mentioned is API, PFI, and the end products.
Right,
So basically, as you mentioned that in an absolute level, our average selling price and the volumes have remained the same. But
right.
uh, I think there can be a possibility since cost is not an issue as you had mentioned. So there can be a possibility that in product mix must have been changed. So do we have a data on what was our product mix earlier, probably five quarters back, and what it has been now?
Right. So like I told you earlier, the quantities again in terms of the overall product mix also the quantities haven't changed, and there has been no change even in terms of the mix, as in the segmented numbers themselves.
Okay, understood. So that means the ratio has remained the same, right?
Right.
Okay.
Can we also look at the competition and what was there? Is their market share the same, and what the government policies are like? Because pharma is also affected by the government policies and the rules and regulations.
Very true. So when it comes to the competition, they haven't taken any radical action. They haven't, I mean, so things are as they were, right? So there's no impact of competition when it comes to the regulatory environment that hasn't changed either.
So, like Rajat, you
Well,
said there were the product is divided into three parts, like pre-formulation, post-formulation.
right.
So, is there any particular segment where we are seeing the reduction in revenue, or is it consistent across all three segments?
It's consistent across all three segments.
Okay.
Right. So, guys, so in our
Rajat,
discussion so far, yeah, sure. Go
did
ahead.
you give any information about average ticket size of our orders? Has that reduced? Maybe we have discounted our prices.
Right. See, but that's the thing, right? So, like we discussed earlier, there has been no price change. Total number of units sold, again, there's no change. Right? Whether it comes to the APIs or the active pharmaceutical ingredients, or whether it comes to the pre-formulation intermediates, or whether it comes to the overall end product, right? The formulation itself. So there's been no change in the quantities themselves, right? Nor, so even if you consider, say, bulk orders or a decline and all that, given that the overall, the net numbers are the same, we don't need to explore that line, right?
How has
So.
been the tax policy by the government?
Right. So taxation again hasn't changed. Taxation has been consistent, and the way it's always been over, say, the past 4 5 years.
Any additional cost that we are incurring apart
No,
from
so we're
what
not
we
incurring any additional costs. We're not incurring any additional costs. So, guys, so let me sort of draw you into one aspect that we haven't covered this thus far, and that is the customer base, right? What are the kind of customers that we have? So, I mean, could you guys probably more, streamline that question a little bit and send it back to me? Let's discuss the customers. And this is why I say again, like when it comes to profitability cases as well, the business situation framework is very helpful.
Hospital affiliated pharmacies, distributors, and direct customers. Like this may be the some of the customers we have.
Correct, correct. So now again, so when it comes to the customers, let's sort of segment them, right? Segment them better. So one is, of course, segmenting them the way you have, when it comes to, different endpoints or distribution channels. However, there are various other ways of segmenting customers. Can we look into that?
Are you saying by disease type or like?
Oh, that's one. That's an excellent one, which is therapeutic area.
Yeah.
Um, Probably I'd request you to prod further because that's not where the crux of the problem is. So what you need to really do is, so when you discuss a case, probably give 4 or 5 different possibilities of segmenting this, and then one of these would probably be the one. And so that's
We can
how we
also
need to
do it
approach it.
geographically, like North Indian and South India, and like area wise.
Right. So the answer is, of course, so though I say it's a large Indian pharmaceutical company, it does not mean the customers are Indian, right? So there are a whole lot of customers in different regions. One is I mean, the huge customer base in Europe, large customer base, of course, in North America, and also in the LATAM markets, right? The Latin American markets. Uh, and only about 5% of its revenue comes from the Indian markets.
So maybe we can do what we can do is segment it into Europe, Middle East, Southeast Asia, and Asia Pacific, like all these regions, like Americas and all these, and then
Right.
probe for the region by region, one by one.
Right. Perfect. So now, so let's just take North America into consideration. All right. So there's been an impact, and now this is of course across the customer base. So do you see what the issue is? Do you see? So I've already told you that there's a huge export market here, and then there's very little internal, or rather India-based sales. So the question now is, what could be the possible issue here?
So Rajat, do we have any information on exchange rates? If
Right.
the
So that
customer.
really is the crux of the problem, right? You see a declining exchange rate of India versus some of the foreign currencies, right? So that really is the crux of the problem. So why I really highlighted this problem here is that you have to know that there's a flaw in the profitability framework, right? it does not consider exchange rates, right? So that is one aspect that is usually overlooked by most people, and critical for us to really take this into consideration. Any firm that has exposure to foreign markets would have the exchange rate risk, right? Whose revenues, I mean, its revenues would have the exchange rate risk. Another critical aspect that, and so when it comes to the recommendations, of course, there's fairly straightforward. You hedge them, right, by using futures, I mean, derivatives, essentially, futures and options. So that's how you go about it. But that's how, there are certain flaws in, isolated frameworks. And therefore, this very framework driven approach where, we try to force fit problems specifically into, certain set frameworks would not be such a great idea, because not only are the frameworks in isolation sufficient in and of themselves, but there's also this issue of having to combine multiple frameworks, and even then there could be this issue that that could be skipped by all of these frameworks, right? And like you just saw here, it's the exchange rates, right? So I hope that was useful in showing you that a framework driven approach has its own flaws, and we'll need to be very cognizant of the kind of issues there are with each framework. So that's very important. Therefore, the best way to look at things would be a combination of multiple frameworks while also being aware of its inadequacies, right? In isolation. Cool. So as we move, I hope that was clear, and request you guys to clarify in case of any doubts.
Rajat, actually, I have a question here.
Right.
Yeah. So basically, in this particular case, even if we would have gone by the framework step by step, we still would have missed the exchange rate
Yes.
part, right? So,
Yes, it's
so
gone.
what could we do? Like, should we make our should we enhance the framework on our own when we find this kind of typical cases and add it into like our notebook or something like that? As in, like what I used to do
Right.
is I used to write the typical thing about industries, as in, pharma has some sort of a regulatory aspect which can impact the pricing. So that is a better way, or how should we like remedy this?
Perfect. Right. So there are two ways, right, that you can remedy this. So one is, of course, sector specific, and it has its own nuances and everything. That's a very good way of going about it. So what you've done is really good. Now the second aspect, of course, is to really look at these frameworks in isolation, and by virtue of being exposed to various cases, you would see that it has its own inadequacies, right? So you list those inadequacies down, do your research, and find the inadequacies of all of these frameworks, list them down, and then once you sort of combine them as well, you'll be cognizant of what is lacking, right? So you'll need to follow a two-pronged approach. One is, of course, sector specific, critical, of course, because the second you're aware of the sector, things become much easier. And the second, of course, is this is more of a framework oriented one, where you see what the flaws of, or rather the inadequacies of, certain frameworks are, and then you see how best to make up for that, right? So these are the two ways in which you can handle that.
Okay, okay, understood. Yeah, thanks.
Rajat, also that you said here the problem, the crux of the problem here is the exchange rate, right?
Correct.
So is there a possibility that there can be two or three different reasons, like maybe the import or tax rates have changed or tariffs have changed?
Precisely. So I didn't want to get into the various possibilities, and because I just wanted to highlight certain issues, which was, and also because in the beginning I clarified with you that the tax rates had not changed. Now I could have gone in further and said, look, you only asked me about Indian tax rates, or rather the corporate tax rate, and not the tax rate in the customer
Internationally,
geography and so on,
internationally,
right?
yeah.
Right. So I mean, because you not necessarily in every place would you have a trade deal of sorts, and so for this reason, you could again have, say, double taxations in certain cases and so on. Right? So there could be multiple nuances that can be built into a case. I haven't gone into this because it's just a question of nuance, right? Because if you'd been broader and asked me about tax as such, I would have probably let you know those details. So my point is, there are a number of nuances that can be built into a case. So based on how you frame your questions, you'll be able to gather answers to the relevant ones. But the main reason why I had this case in the first place was just to point out this particular inadequacy in the frameworks that we have, because the tax is actually mentioned, of course, both in the business situation framework as well as a whole bunch of others. So yeah. Hope that clarifies.
Yeah, thank
Okay.
you. I was more saying about not the tax, but the like import rate. Like if we are sending medicines, then there might be some import duties or custom duties, something we are paying them. So that's what I was also saying.
Right, right. So you could, broadly classify that. See, again, all of these duties, again, so whether it was, octroi, whether it was, again, like this is in the Indian context, right? Whether it was octroi, whether it was certain other duties, whether it was certain other customs and so on, right? All of these charges. So all of these can be bracketed under tax. So you can probably bucket them into multiple types and then, probably ask for data on that. So that's how you can approach that. So the answer is, of course, when it comes to these charges, right, that are levied, you can really go ahead and, really explore all of these possibilities in further detail, right? So if it comes to that. Okay, so now let me move on to the market entry framework, right? So there is one, so this is again the business situation framework at play here. However, there's one critical nuance which we'll cover right after this. So when it comes to the business situation framework, just to provide a brief overview, we'll need to look at customers, what each segment wants, and this is critical, right? So like I told you earlier, like we saw earlier in the previous case, customer segmentation mattered a lot, right? So you'll need to segment them and then see what each price, what each segment wants to pay, then what is the preferred distribution channel, and so on. Second, of course, is critical, which is the product, and usually the order in which this comes, right? The order in which you really approach this is usually the product comes first, and then the company. You understand the product better, then you find the company. You understand the company better, and then you understand the customer well, and finally you go into the macros, right? Which is the industry or the competition. So when it comes to again products, it's the nature of the product. You would see whether it's a commodity or a differentiable good. What is the nature of the good, right? If it's a Veblen good or whether it's a regular normal good, and then you see complementary goods, substitutes. You'd also see where the product is in terms of the life cycle, right? When it was introduced, whether it's in the maturity phase, whether it's in the growth phase, whether it's in the introductory phase, and so on, right? Or the declining phase. So now, again, so you'll also be looking at smaller nuances like the packaging. Now, of course, that is a nuance that is served in very specific cases. But again, just to be aware, it is important to list them all down. Now, when it comes to the company, as you're aware, usually um, when it comes to market entry, it's usually an established company that is really going ahead with this, right? So when it comes to market entry cases, it works very well to understand the expertise of the capabilities, right, of the particular company at hand, what its cost structures are, what are the nuances of how it operates, right? Like its cost structure, what is its financial situation, the organizational structure. So for instance, right, so when it's trying to say if a product company is really trying to enter a services market, there has to be a huge overhaul of its human resource staffing and everything, right? Because the critical aspect is when it comes to a product company, they don't have to deal with very specific client based grievances, right? So for instance, a service based company on the one hand. So let's look at software. Let's look at a software firm, right? That's totally been into software products and wants to enter, say, services, right? Now, the whole point is when it comes to software products, there will be very little in terms of having, client specific requirements that need to be met, specific teams just for specific marquee clients and so on. Right. So all of these nuances come into the picture when it comes to the organizational structure, and that's why you need to consider it. Then last aspect, of course, is the macro, aspect of it, whether, what the Porter's five forces are, what the, regulatory environment is, how is the competition like, and so on, right? So that is fairly clear. So now, specifically when it comes to market entry, right, we'll need to look at it in terms of three aspects, right? The first is the opportunity. The second is the feasibility. And the third is in terms of the viability. So what do these three aspects mean? So the first is the opportunity. So the question is, hey, does this opportunity make sense? Right? So does entering a new geography or a new market make sense? And so on, right? Or a new product, does introducing this new product make sense? And so on, right? So how do you determine opportunity? You use the following three metrics, right? So the first is what is the vision or what is the objective of the company, right? So you usually use a funnel approach and say, look, this is the vision, this is the mission, and then this is the objective that the company has. And once you're very clear as to why the client wants to go ahead with this, you then look at it in terms of the market, right? Whether the market for the specific good is big enough, whether the client is in a position to capture it, or whether there's a fighting chance of making this a success or not, and so on, right? So that is in terms of judging opportunity, right? The second is in terms of judging feasibility, right? What is feasibility and what is viability? So there's a usual confusion between these two terms. Feasibility is really looking at, hey, is it possible for me to really make this foray into the new market, right? And this is mainly from the side of the company, right, at hand. So whether the company is, whether it's feasible for the company to go ahead with this in the first place, hey, whether the regulatory constraints of this, whether the competition, is sort of, something that can be handled and so on, right? So whether it's feasible. Now, finally, when it comes to viability, right, what you're really looking at is, hey, whether it really makes economic sense, right? Hey, does it make financial sense for us to go ahead and do that? What is the timeline that we need to consider? What is the gestation period, and so on, right? So that would be in terms of the viability. As soon as we are done with these three aspects, we will need to make that recommendation as to whether it's an in or a not, right? So this is where you have. Now, when it comes to a decision of an in, right, you have three possibilities. Whether you want to, so essentially, you want to enter the market at this juncture and say that, hey, what are the ways in which we can really enter the market? The answer to that is, of course, in terms of three ways. One is, a greenfield project, right, wherein you go set everything up from scratch. Or the second is, of course, an acquisition, right? You go and buy one outright, buy a firm in the target geography, or target market outright, and then go ahead with it. Now, the third aspect is somewhat similar, which is a joint venture, right? So you really end up having to decide what is the best way to implement this, right? So the first part that we talked about was, hey, whether it really makes sense from a strategy perspective to go ahead with this. And then finally, if we were to implement it, how do we do it? So this is what a market entry case, involves. But these cases are fairly straightforward. And so now let us just jump right into the case. But first, do we have any questions?
Rajat, how do we assess if it's aligning with mission, vision, or objective? So that is
Right.
something the subjective assessment, right?
That's perfect. Right. So you clarify. Hey, what is the vision? What's the mission? What does this company do? Does it have previous experience in this field? Why is it suddenly interested in actually venturing into a new market, right? So there's always a trigger. Okay, so it could be trigger in terms of, hey, my current market is saturated, and therefore I need better growth opportunities, and so I'm jumping into a new market. That could be one. The second could be, hey, I want to diversify, and there are multiple umpteen possibilities, right? So you always clarify what the company is into, what the company wants to do, why it wants to do what it wants to do, right? So it's essentially one that the interviewer gives. So that is something you'll need to clarify.
Yeah. So I was thinking about this because, like, usually these three statements, they are very generic and they cover a lot of aspects in general. So, like,
Right.
they're like confronting or like asking the customer or the client directly about how it fits and would it be really helpful to the case? Does it usually work? I wanted to
Right.
understand that.
Right. The answer is straightforward. The answer is they give you the context, right? So asking the client for context is critical. Hey, why do you want to do what you want to do is critical, because so the whole point is there is always an underlying reason as to why certain decisions, especially of the magnitude of this kind, are taken, right? So always critical for us to know why they're doing what they're doing, because the second you choose to ignore that, every other point falls flat. And this is how, right? So I'll give you an example. So yesterday, I think Arjun must have discussed pricing to you, and I think he would have discussed something along the lines of, say, introductory pricing and so on. So usually it's in many cases it's priced below its cost and so on, right? And sometimes it's just all about paying you for using the product and so on, right? So the whole point is that is, when you finally come in terms of the implementation and so on, you would really see why this makes sense, right? The second your objective is really that, hey, we just want to add this extra feature, but this is not where we want to, make our money in, then the whole logic, of the market entry changes, right? So that is why you need to know the context, and that is critical. The objective is a critical aspect.
Okay.
Yeah. Right. So let's now move into the market entry question, right? The case here. So essentially, our client is a US based media company, wants to launch a new channel for the Indian market, and we need to figure out how. So fairly straightforward. So let's try and let's sort of keep our questions very structured. So it has to always be like a flow, right? So it has to be in a flow, and there should always be the most important question that has to start the discussion, right? So that's critical. So if we were to do that, what are the kind of how do you approach this, guys?
I would say we should start by setting the context right about what the company is, what markets, what type of audience it caters to, and definitely why it wants to expand into India. And uh, are there any similar businesses? Basically, getting the context about US companies, how they work there, and why they want to work in India, and are there any competitors, or what is the scenario like? Yeah.
Right, perfect. Right, perfect. Right. So we've covered what the entire set of primary questions would be like, right? So you use the business situation framework and say, look, Bob, what is the company all about, right? What is this US based media company all about? What does it do? What is its current portfolio of products, right? Or portfolio of channels in this case, and then you finally see what is the objective, right, of the company in entering this market, right? So through this, you've covered, the company and the product, right? Now, of course, it's a current set of products. Now, the question really is, hey, now so now the next step, of course, is to judge opportunity, right? So now, what are the kind of information or data points that we would need?
We can first target what area in that country we want to first open or start with, and study the demography there and what kind of people we want to target in the demography, what is the target audience, and use maybe the 3CP model.
Right. So that's right, right? So, but let's say that, it's the entire Indian market, and then, and so on, right? So you also have to find out. So I mean, this would have come up a little earlier, upstream in the discussion, that hey, it's an English channel that they want to launch, and the customer, So again, we'll need to identify what the customer is, right? So you'll need to, I mean, so eventually the interview will give you the answer, which is that it is for kids and so on. Okay. So then the next step, of course, is to go ahead and say, look, when it comes to kids, is there any gap in the market, right? Hey, what is the opportunity? There has to be some gap in the market. So the question is, how do you determine the gap? When you determine opportunity, you're going to consider the customers, and then you determine you consider the competition, right? Hey, competition is offering me XYZ different channels. It does not offer me this, and so on. And then you try and fill that gap, right? So that's usually the conventional way in which one would approach this kind of a case. Okay, so then the second you do that, you try to judge feasibility, right? Hey, does this client have the financial wherewithal? Also, does it make sense for the client to do this at this particular point in time? What is the competitive scenario like, and so on, right? And then finally, one would look at viability. And usually a lot of these market entry cases have guesstimates embedded inside of them, right? And this is for, very intuitively, because you'll have to really look at the market size, right? Because while you're determining opportunity, market sizing is an embedded part of that, right? So that's how we go about, cracking a market entry case like this. So it's fairly straightforward, fairly structured. The structure, as in the framework that we discussed, has it all, right? In addition to the business situation framework, or rather, the business situation framework should be used in conjunction with the three components to it, which is judging opportunity, deciding on feasibility, and finally, determining the viability. right? So that's how it works. It's always a combination, like we discussed earlier, and this is the combination that is usually preferred. And one more nuance that I wanted to bring to your attention, folks. So that is that, when it comes to a new product as such, a new product launch, which is of course a subset of a market entry case, you want to go ahead and determine what the rationale for the launch is, whether the firm has the financial bandwidth to go about setting it up all by itself, and so essentially what are the investments required, and finally you go into the customers and the competition and so on. So that's how you go about with that. And now, any questions, folks? So this covers our market entry case, right, or the market entry framework.
So Rajat, the approach I was thinking for this question was, uh,
Hmm.
it seemed like all those questions could have been part of the first initial research as well. Like what I was thinking was to understand what the company is willing to do, in what kind of products they want to launch. Do they want to launch the same content that they do in US back again to India? And second thing, how much money they want to invest. So these all seem like a preliminary questions in itself. So
Right.
would that have been a wrong approach, or maybe
Right. No, no, no. So let's understand this better. When you're really looking at, hey, what is the sort of product that we need to make? It usually comes about when you consider the opportunity, right? So when I look at opportunity, like we discussed, we'll need to consider the gap, right? So how do you judge gap? Like we discussed, it's the customers and then the competition, right? So you understand the customers well, and then you also understand the competition well and see what the gap is. The next thing therefore is, hey, how do I customize my product, or if that is in case there is a need for customization in the first place, right? So hey, what is the sort of manner in which I need to customize my product to suit this audience better? And also, is there a gap in the market, or do I already have a lot of competitors and there is literally very little in terms of a gap, but maybe I can enhance some feature or the other and so on, right? So you'll really need to see what the rationale is, right, in terms of the product characteristics. So again, this is a very product specific one, which you will understand the second you're able to judge the customers and the competition well, right? So you don't go about it in terms of the preliminary questions as such, because these could be, this could require a more nuanced approach in terms of customizing a product, right? So what you need to do in your preliminary questions is find out status quo, right? So status quo is really, hey, what is the portfolio of channels, or what is the client base that the US based media company currently has? What is it? What is its expertise into, right? So once you find out all of this, you understand, hey, what is its current portfolio, what is it good at, and so on. The next step after that is, hey, how do we bring that to India? And how do you bring that to India, or rather, how does the Indian opportunity look like? That is when you consider all of these, product customization and all that. Because the second, because until the point you haven't, or until the point you analyze the Indian market, you would not be in a position to make that customization in the first place, right? So what you really do is, once you understand the Indian market and its competition and everything, you usually propose different possibilities. So this is not, so when it comes to that, specific product characteristic that you were asking, this is not something that should come from the interviewer, but something that you propose, hey, multiple possibilities to the interviewer, and based on the interviewer's response, you can decide which one to go ahead with. Does that answer your question?
yes, I was missing out on identifying the characteristic first and then moving to all this. Yeah.
Right. So usually the approach is, your preliminary questions are meant for you to, understand what the status quo or the context is. And the second, you're done with that, you'll be in a better position to judge what the, how to go about solving the problem, right? So that is something that you need to keep in mind. So the question is, how do you know which one to ask the interviewer and which ones not to? If it involves some sort of customization or some kind of, essentially solving a particular problem. So, a whole new product offering, or, a service offering, and so on, right? All of these are very, very, are things that need to be analyzed, right? These are not given on a platter. So from that perspective, you can go ahead and infer that this is something that comes down the line rather than upstream itself during the preliminary questions.
Yeah, got it. That is.
Right. So now, and this is a critical, moving on, right? So this is a critical element
Uh,
for a lot of you who
yeah.
have, yeah,
Rajat,
you have a
sorry
different
to
question?
interrupt. Actually, I have one question.
Sure. Yeah.
Should I go ahead?
Please. Yeah.
Yeah, so basically, my question was that when we are doing the market attractiveness, so what we do is we analyze the market, we do market sizing, growth potential, competitive analysis. So after doing this, we have a fair idea whether it makes sense to enter or not, right? So like then, is it always required that we do some sort of NPV, IR, or something financial metrics to justify the return on investment, like all the time, or does the market sizing area is enough for that?
Right, great question. So what you need to really do is so you don't need to do NPV by virtue of the fact that you don't need to do a discounted cash flow and so on, right? Because
Mhm.
NPV is too nuanced. So
Yeah.
because it's not a finance based question and it's more of a strategy and structured thinking based or a business analysis based question, your whole approach would be, hey, what is the kind of investment that is required and what are the cash flows that I would get, right? So you'll need to look at what you put in as of T0. Again, you'll need to work it out, right? So whether you have the financial wherewithal and so on. So I mean, so
Yeah.
keeping that aside, right? So you'll need to look at what is the investment that is required, what are the cash flows that you can see year after year after year, right? So which is what you'll get once you size the market and determine the revenue potential, the annual
Understood.
revenue potential, right? So once you combine these two aspects, you'll be able to determine, hey, year one might not be enough for me to recoup my investment. Maybe it takes me 4 or 5 years, but you don't need to use the discounted cash flow approach because that's a very nuanced finance heavy one.
Yeah.
You don't
Yeah.
need to go with that. So for all practical purposes in cases like this, you can always go with a non-discounted or
Yeah.
an
Payback period.
absolute approach. Right, just use a payback period and finish the matter. And
Okay,
you have to
understood.
check, right? So you also have to check if the client is okay with that payback period, right? So again, in the preliminary question, you'll need to see, hey, you'll need to ask, what is the sort of timeline for this particular project? Do you have any specific constraints that that we need to keep in mind? Something that, say, if the client says, look, whatever happens, I'm looking at a payback period of 4 years or 10 years. But if it doesn't, if our estimates don't work out along those lines, it doesn't make sense for us to enter and so on, right? So that's when that comes up. So you usually scope this out in your preliminary questions.
Okay.
But in case it
And
doesn't come, right.
yeah.
But let me just point a
Yeah.
caveat
Yeah.
here. In case it doesn't come out during the preliminary questions, also, it's perfectly fine to ask the interviewer, say, after you calculate the payback period, just wanted to, do we have any data on checking whether the client is okay with this sort of a payback period, right? So these are the kind of things that you can scope even down the line because it's a little nuanced. So it may not be as broad-based as the rest of the preliminary questions that we would have in mind. Yeah.
Okay. Yeah, understood. So basically, in a preliminary question, when we ask for the objective, it can be profit, or it can also be acquiring some percentage of market share, right? So in that case, so it doesn't make sense to do into the financial nitty-gritty because market share is not related to cash flows, right?
Precisely. The second, yeah, because a lot of this is nuanced, right? It's always better to, again. So how you go about deciding whether this is a preliminary question or not, whether it helps you understand the context better, whether it has more to do with the current situation, or whether it is something that needs to be worked out down the line, right? So that's how you decide whether it's a preliminary question or not, right? So in this case, because it's a little more nuanced, because once you really go down that road of seeking opportunity and deciding whether it makes sense, that's when you really come up with this, right? So therefore that question comes downstream. That's how you
Okay.
decide.
Yes. Yeah. Okay.
Right. Okay, cool. So I'm assuming there are no more questions on market entry, but if there are, please do interrupt me at any time, whether it's with regard to market entry, whether it's regard to profitability or any other uh, framework that you would want to discuss, right? Or any other approach. Now, this is a critical element, right? That that those of you who've landed consulting internship, congratulations, by the way. So some of these aspects are critical to really making your internship experience smooth, to be able to give you maybe a half an hour more of sleep. Believe me, it's a big deal. Right? It's a really big deal. So, a lot of benefits, right? To really having your pre-internship preparation in order. Huge benefits, huge dividends to all of these. Fortunately, I was able to talk to some of the employees at the place where I interned, and so I received a lot of benefits from this particular measure, right? So, for some of you who'll be interning, right, in consulting firms, could you guys take a guess as to what broadly the preparation would involve?
Maybe getting industry specific knowledge, so that whatever challenges we get, we have something to start with at least.
Right, right, right. And any other thoughts? I mean, you could give me a whole host of things. Right? I mean, it's fairly broad. What are the different things you can do?
I think two things which come to my mind is one would be the sort of a skills related to how you do research, and second I think would be regarding Excel modeling or PPT skills or something like that, which is those sort of a skills.
Right, right, precisely, right. So there are critically two elements that you'd want to see, right? One is in terms of the tools, and the second is in terms of the knowledge, right? So when it comes to the tools, what is recommended, or rather, what was recommended to me, were these four different tools, right? Out of which I did not have a chance to go through AlterX, right? Now that's also a very useful tool. However, when it comes to AlterX and Tableau, you can really learn it on the go because the level up to which one would, as a consultant, one would have to deal with it may not be as nuanced as one whose primary job is that of an analyst, right? So therefore, this Tableau and Alteryx can be reserved for a little later. But should you get a chance, please go ahead with learning these as well. A basic level, an intermediate level would suffice, right, when it comes to Tableau and Alteryx. Now, when it comes to MS Excel, uh, one would obviously recommend the most advanced level of modeling, right? Now, and the reason for this is multiple, right? Not only are you supposed to know the various functionalities of Excel, you're also supposed to be able to do them very, very quickly, right? And this helps improve your ability to churn out output in very little time, and so on, right? Critical skills here. And finally, of course, PowerPoint, right? And this needs no explanation. An important aspect, right, when it comes to Excel and PowerPoint is that there are a lot of add-ins, right, or add-ons for both Excel and PowerPoint, which are generally available once you're able to take the internship firm's laptop, right? So it generally comes embedded in that and everything. So now the important aspect is these add-ons make life so much easier, disproportionately easier, right? However, it's important to know the level zero functionalities of Excel, as in without, of course, these add-ons, because they help you. Go to. Because see, what happens is when it comes to the add-ons, the training for that you receive once you start with the internship. However, if in case, because there are a whole lot of functionalities that come in embedded with these add-ons, there are a lot of cases where, you're not in a position to learn them all up and so on, right? So you need to be in a position to manage with Excel regardless of whether you have the add-ons or not. So in that sense, this is especially useful in PowerPoint because the presentations improve drastically with some of these add-ons. I mean, they change the quality of the PowerPoint from from a level 4 on a scale of 10 to a level 8 or more. Right? So that is critical. So in terms of tools, please start your preparation at the earliest. By that, what I mean is, of course, some of you have already finished with your consulting placements, and so now's the time to relax a little and so on. However, probably preparation for Excel could happen sometime in February or March, right? Now, what's also important is after you've done it for the first time, it's important to really revise it so that all of that is on your fingertips, right? So it involves two rounds. So the first is when you really learn all of these functionalities in the first place, and the second is you actually practice some of it, maybe in your third term, right? So this of course comes in handy for a course which is RMP from what I recall, right? Essentially, research methods in business. Right? So that particular course involves quite a bit of workings in Excel and so on. So essentially statistical analysis in Excel. So, and that comes in term three for all the PG 21 folks, right? So, because that's an important, course, and that's where you could possibly get to explore some of these. It is recommended that, you try and finish this maybe at the beginning of term three. Right? So that's where you'll be able to use it as well, and therefore acquire the familiarity which is required. Okay. And the second part, of course, is knowledge, right? So given that, you're not really in a position to determine what sector you'll be placed in, and because the value chains of, various sectors, I mean, the second you deep dive into a particular sector, these can get really nuanced and complicated, right? So what is generally expected is a broad understanding of the various sectors. By that, what I mean is understand the value chain of these various sectors and so on. Right. So question, of course, is, hey, what is the resource for that? Usually the Unnati reports that folks have here, right, which I imagine has been mailed to you, those would serve as a handy reference guide for the basic value chains, of the different sectors. And the second aspect, of course, is we need to be aware of the current problems that industries are facing, because these would generally be in line also, broadly speaking, in line with the problem statements that one would have while being put on actual cases. Right? So these are two critical elements. What I will also do in order to help some of you to improve your awareness on all of this is I've taken some of these courses. Some of these were recommended to me by the firm where I interned, and so I'll share some of these links because these were really on public platforms, right? Like Udemy, Coursera, and so on. So for this reason, since I have some of that, I will email it to you in a follow-up email. Completing that would be very helpful for all of you. So I think that aspect should summarize our pre-internship preparation. All right. So another, last but not very often talked about point is that one would really need to keep in mind how one can, optimize sleep, right? So what happens is, as a lot of you are aware, when it comes to consulting, consulting internship, it's usually very, very rigorous, right? So for this reason, trying to manage your sleep patterns and really optimizing for that. By optimizing in this context means reducing, right? So I don't want to mince words here, but one would have to be content with, say, around 6 hours of good sleep. Now, of course, there are measures that a number of firms take, which would entail, probably giving you enough time and so on. But given that one would want to really give one's best and optimize the internship experience in every way, and probably deliver a really tangible and worthwhile outcome, one would really want to, optimize sleep and, other activities such that you have a large majority of the day left to really focus on the work. So one of the last things that I did right prior to my internship was to really optimize my sleep schedule such that I could manage with around 6 or fewer hours of sleep. And this came in very handy because, again, what happens is if you're not used to that, the brain tends to freeze and thinking can become a little cloudy, and it's not a worthwhile proposition to really learn how to optimize sleep during the internship, right? So it's always better to go prepared, right? So that's the way it works. So I think these three aspects would cover most of your pre-internship preparation. uh, you can, the rest of you, those of you who have specific questions can always reach out to me, right? So but first, any questions, folks, on any of these aspects? All right, then. So, I would appreciate feedback as well if some of you have any.
Yeah, hi Rajat. So basically, I think it was a really great session, especially for me because I earlier knew or I had a feeling that there are some blind spots in certain frameworks, but I had never yet come across something like what you showed about the extent difference in the profitability case, right? So that was really specific. So I think now I know exactly what I would have to do with all the frameworks to ensure this kind of a thing. So I think in that sense, it was in a very specific sense, really useful.
Right, great to hear. So I hope, that would encourage you to look at various other holes, or gaps in the frameworks and, utilize them well. Most importantly, in case of any further questions, of course, you can always reach out to me anytime. Right?
Yeah.
All right,
Thanks.
folks. So, yep, yeah. So, all
I
right,
just
folks.
one
So, yeah,
question.
sure,
Um,
sure.
is there like any online community of case or consultants or something? Because like Prodmans have their specific pages where they put out information very relevant to the field. So are there any such?
Right. Right. So when it comes to when it comes to consulting, right? So there are, of course, very broad sources, but nothing like a community of sorts that you see. All right. So
Yeah.
from so therefore, so what really makes sense here is to really network or probably speak to consultants who are currently in their roles and so on, so that you could always follow through with their suggestions and so on. So that's one way in which you'd be enabled to have a more productive internship experience, and maybe down the line as well. And the second thing is, of course, there is there are consulting magazines and so on, that one could refer to understand, hey, what is the sort of trend that is going on and so on. So that is another aspect that you could consider. And finally, there are a lot of groups that you would see for real case preparation, well, not so much for post case, but prior to internship preparation,
Yeah.
right? So that's one gap that you see, but that's something that you could explore, right? Probably among a whole bunch of your batchmates who have landed the consulting internship, it would be very useful for a lot of you to really collaborate and see how you can maximize on the preparation prior to the internship.
Got it.
Right.
And Rajat, it was a brilliant session. I would say
Thank
that.
you, thank you.
Thank you.
Thank you. Glad to have helped, and feel free to reach out anytime. Very happy to help all of you. And again, the rationale for this session, right, was simply to help all of you. Most importantly, my batchmates, those of them who are looking to sit for consult interviews, and critically also, for the PG21 batch who would be going right into their internship, right? So, one last point that I want to highlight is right prior to the internship, do go through the case frameworks and the various approaches. And I think that would help you, maximize the initial few days, right, before you would jump into the nuances. And, I think that would be very helpful. Yeah. So best of luck, guys. And always feel free to reach out to me, right, whenever you need. All right. So best of luck and have a good rest of the evening and night ahead. Bye.
Yeah. Thanks.
Thank you,
Thanks,
Rajat.
Rajat.
Thank
Yeah.
you. Bye.
Rajat,
Thank
will
you,
you be
Rajath.
sharing the recording and the PPT or not?
I will be sharing that with you. Sure. Yeah.
Okay. Thanks for the session, Rajat.
You're welcome, buddy.
Thanks, Rajat.
You're welcome, Aditya.